Okay. Yeah, welcome to the class. So in the last weeks, we discussed about some topics in the market. I discussed that was based on technical analysis. So I want to introduce you to risk management system because it's very, very essential as a trader. You need to be balanced in terms of money management. Even though I give you the best trading strategy in the world, if your risk management is not LD, then everything is a trash. So you need to know how to calculate your risk before you get into a trade. You need to know how to analyze, how to implement a reasonable risk reward ratio. Before you get into a trade, you need to know how much are you willing to risk to the market? How much are you willing to have as a profit? Is your risk reasonable for the profit target you are looking up to? So these are the things I'm going to walk you through today. So I'm going to introduce you to a free open source risk management calculator tools. Actually, it's open source utility tools which is being offered from my own personal brokerage firm. I'm going to send you the link at the end of this uh, class, this webinar class. And then I can have the link of these free open source utility tools under this video. So you can just navigate under this video after this class. So you can bookmark that page. So whenever you want to execute a trade, you can simply use these tools to calculate risk. That is every risk you want to initiate in a trade. So okay. I'm gonna navigate on my own page right there. So I'm gonna click on the bookmark right here. So on the bookmark right here, this is my brokerage firm. That is Hot Forex. This is a brokerage firm I recommend to traders in Asia, Europe, and Africa. So as a US student, you can go with other brokerage firm like a Hondo, no other brokerage firm, but whichever brokerage firm you are using, you are free to use this free open source utility tool. So you can just use it to calculate your risk percentage, every risk, how much percentage you are willing to risk in each trade you want to execute. So right here is these tools. Actually, there are other free open source tools you can use to analyze, to calculate how much are you willing to risk on a particular trade. But I'm just making use of this because this is what I use personally, and it's very, very simple to use, and it's free. It's open free, no matter the brokerage firm you are using. You are absolutely free to use these tools right here. So like I stated earlier, I'm going to leave the link at the bottom of this video. So navigate under this link or link under this video so you can get the page, the link. So I'm going to navigate on my screen right there. Here is my screenshot right here. And then I'm going to navigate. Let's navigate some currency pairs I got right there. So let's check on the daily chart frame right here. So okay, let's look for a trendy market so we can have a better understanding of the content information I'm trying. Okay, right here is a trade. That is a currency pairs of the European against the Japanese yen. So let's have this as an example. I am on the chart, that is the daily chart of the European against the Japanese yen. And then I am looking out for trade opportunity on this currency pairs. Maybe I want to anticipate for a bullish upward rally on this currency pairs right there. And then I want to implement my stop loss maybe at this swing low of this pass right here, or maybe right here, or maybe right here. And then I want to target maybe, let's zoom in. So here is this market right here. I want to make an entry. For example, if price gets to this structure right here, I want to make an entry right here, and then have my stop loss right here. And then whereby I target this next resistance structure right here as my take profit target. Okay. So before I get into this trade, I must know how much am I willing to risk first. That is the number one thing you have to put into consideration. The major reason why most traders fail, to implement a healthy money management system into their trading decision is simply because they focus on the profit first. They focus on the take profit target. Their main priority, the most thing they think about is about the profit. Before you get into a trade, the first thing you have to put into consideration, the number one most important thing which should be your priority, is your risk. Your risk. Okay, so right here, I want to have my stop loss right here and then my entry right here. It means if the trade should go bearish downward, I want to get out at that is at the low swings of these bars right here. And then if the trade should go in direction of my no anticipation, then I'm going up in a profit. So before I execute the trade, I must be willing to know how much I want to risk right here. So as my advice to traders and the beginners in the market, it all depends on your trading experience. I personally, the kind of risk ratio I can implement or the kind of percentage I can implement to risk or to decide to risk in a trade may not be favorable for you due to your level of experience. So it all depends on your level of experience. But as a beginner in the market, I do advise do not risk more than 0.5, 1%, 2% of your total account balance. It means if you have $1,000 in your trading account, don't risk more than 1%, 0.5%, or what? 2%. It means do not risk more than 0.5%, 1%, 2% of your initial balance. So if you have $500, don't risk more than 1%, 0.5%. So this will help you to prevent your account from being wiped out easily. Okay, so this is the usefulness of this risk percentage calculator, which I'm going to educate you about today in this webinar. So I'm going to show you right here. So the first thing I want to do right here is I want to measure right from my entry structure right here to my stop loss structure right here. So I want to figure out how many pips value or what is the price level which I want to get out if the trade goes against me right here on this market. So I have to measure that, and then right here I can implement this tool right here to measure from my entry structure right here down to this low swings of this bar right here. That is this low right here. Okay, so if I should initiate a trade from this level right here and then have my stop loss at the low swings of this bar right here, that is at this structure right here. If my stop loss should be at this structure low of this bar right here, that means I am trying to risk like a 97 pips downward. 97 pips downward. You can see that. So I am willing to risk 97 pips value. So what we need to do right now is to navigate to our risk percentage calculator. The risk percentage calculator, you can easily calculate. It helps to easily calculate your lot size by specifying the amount percentage of your balance that you are prepared to risk, the opening and the stop loss price, account currency, and the currency pair. So this is where the tactics comes in. After you have detected trading setup on your chart, that you have detected these trading setups has high probability to move into direction of your anticipation. The next thing before you execute such trade is to navigate to your risk percentage calculator and try to run management analysis. You don't just have to run technical analysis, fundamental analysis, sentiment analysis, and then neglecting the risk analysis aspect. In fact, the risk analysis, it's very essential. Trading is all about risk. It's all about risk. So you must ensure a healthy risk money management system. So on this toolboard right on this page right here, the first box we got right here states account currency. Account currency. It means the base currency in which your account is being funded. Maybe you have a dollars account, maybe you have a euro account, maybe you have a British pound sterling account, or maybe you have your account in your local currency. So you need to select the type of account you are running. So right here, you have the opportunity to select from the USD, from the euro. So I have my account deposited in USD dollars. I deposited US dollars in my trading account. So my currency base is in USD dollars. So if you are trading maybe in your local currency or maybe in euro, you can select the currency which is in correlation with your account, okay, denomination. So right here, I'm just simply select dollars. My account is in. By default, USD will be selected for you. So now the currency pairs I want to trade, I want to trade right here, euro paired against the Japanese yen. You can see right here, I want to buy the euro paired against the Japanese yen. It means I want to buy euro whereby I want to sell Japanese yen. So what I need to do right now is to navigate to search for the currency pairs of the euro paired against the Japanese yen right there. And then here it is, euro paired against the Japanese yen. Once I select right here, you can see that the currency pair right now is in euro paired against the Japanese yen. And then the opening price, that is the price level I want to get into such trade. On the euro paired against the Japanese yen right here, I want to execute a trade position based on this level right here. So, and the price level right here is at the price level of 124.904. 124.904. 124.904. So this is the price I want to buy the euro paired against the Japanese yen. And the next option says direction. So the direction means, are you trying to buy or are you trying to sell such currency pairs? So, in the case of the euro paired against the Japanese yen, we are trying to buy. So what I need to do is to select, I want to buy. If you want to sell, you can simply select you are selling. If you want to buy, for example, in this webinar right now, the euro paired against the Japanese yen, I want to buy. I want to practicalize buying this currency pair. So I'm going to select buy. Okay. So the next option right here says stop loss price. That is the price level we want to implement our stop loss. So what I need to do is navigate to my chart right here. I want to get out at this price level of this bar right here. So what is the price level of this swing right here, which I want to implement my stop loss? Remember, I want to implement my stop loss at this structure right here. I want to implement my stop loss right here. So what is the price level right here at this stop loss, which I want to implement right here? So this price level right there is 100. Yeah, 123.849. So 123.849. So you can see that. So that is my stop loss price. So the next option right here says balance account. So what is the balance on your trading account? Are you having a $1,000? Are you having a $10,000? Are you having $100,000? It depends on what you have on your account balance. So for this, for this example, which I'm gonna give right there, I'm gonna just simply use a $1,000 account. So it's gonna be very easy for you to understand. So $1,000 account. So the next $1,000 account simply means this is your account balance. If you have a $10,000 account, you can state it right here as a $10,000. And if you have $100,000, you can as well state it right here as a $100,000 account. So the next option right here says percentage risk. So how much are you willing to risk? Remember the rules as a beginner, don't risk more than 0.5, 1%, and a 2%. So let's make an example. I want to risk like a 1% right here. It means I want to risk 1% of my account value. That is 1% of 1,000. So this is what I need to do. What I simply need to do right here is I'm gonna just input, I want to risk 1%. So the next thing you have to do right here is to calculate your risk. Once you calculate everything right here, you navigate on your mouse downward. And on your mouse right here, once you navigate downward, you're gonna see the stop loss in pips. It means from this price level of the 124.904 and the stop loss of 123.849, it means we are willing to risk 105.50 pips, which means the lot size we need to implement on the trade of the euro paired against the Japanese yen should be what? 0.01. So it means if the trade goes against you, you lose 1%. And this is the lot size, which would correspond to 1% of your account. That is 0.01. Okay. So this is how you can calculate your lot size. So you don't go far ahead, don't go ahead, execute lot size, which is gonna totally get your account being wiped out. So this is gonna serve as a guidance for you, to properly manage your account. Okay. You should be able to calculate what 1% of $1,000 would be. That should be what? $10. Am I right?
Yeah.
So that means if this trade should go against you, you're gonna lose what? Just
$10.
$10. So this is how you can implement the risk percentage calculator to detect how much lot size you should execute on each trade decision in the market. So is this clear now?
Yeah.
Okay, good.